Well, the AI trade has been hoovering up capital. Digital assets like Bitcoin have been doing it tough, and the old safe haven gold has also been cooling. My next guest spends his days at the coalface of digital assets. Bisher Khudeira from Stormrake, welcome back to Ausbiz.
Thanks for having me back on. Cheers.
So, where exactly would you say Bitcoin is in the cycle right now?
We are mid-cycle correction. I mean, we've seen at the peak of October 5th, 6th, or 10th, depending on where you want to try to draw your all-time high. We were trading at around 126,000 at that point. We've hit about a 52% correction. According to most pundits and analysts within this space, it's all that unexpected because we are beholden to the 4-year cycle. A lot of the time people were saying, oh, okay, well, this time is different because of the ETFs and the institutions, and we should have a more sustained bull market, lower drawdowns. I think that has eventuated to some capacity where previous cycles we've had corrections of 70%, 80% or greater. Now the market has corrected about 60% at its peak. I think one thing that I'd like to kind of focus on about where we are now, this is a point in time which is 4 years removed from 2022. We were in a very similar market cycle where we were correcting quite extensively. Back then, it was on the back of the collapse of FTX, Celsius, Terra Luna. There was a lot of specific things you could point to and say that's the reason why we've corrected. Now it's more so the big Federal Reserve giving us a bit of a shakedown. That's why gold has also gotten caught up in this correction, is because there's this future expectations that rates are going to be going higher for longer. I have reasons to say that that won't be the case, but in terms of where we are now, we're in a normal mid-cycle correction, preparing for another leg up in 2027.
So, then at these levels, would you say it's a buy?
Yeah, I mean, it's a very attractive buy. I mean, the words that have been circulating on the desk, especially with our clients, is cautious optimism. It's not a point where, it's back up the truck, it's a fire sale, you just, stake everything and go all in. Obviously, not financial advice, but it's not at those levels where it requires you to be super conservative with your capital, nor does it require you to just throw everything and go all in. It's that cautious optimism that a conservative buy here or there, continuing to explore your limit orders. We've got a lot of clients staggered between 55 and 57,000 USD, where they're expecting, some sort of spill below the 60K level, which has held pretty substantially well over since February 6th. But in terms of what we're looking at is, yeah, strong buy, but with cautious optimism. Don't back up the truck just yet.
And coins have actually doubled to 13% of the market. What's your view on them, and is that affecting Bitcoin as well?
It's something we see in previous market cycles where there's this kind of demand for US dollars, which is what is now being reflected in a 13% share of the overall crypto market cap. I don't think that's what's causing the pressure. I think that's just more a reflection of the softness of the Bitcoin market more than anything else. It won't be long before that, starts going towards single digits as people within the crypto space start deploying their stables into Bitcoin and other digital assets. One thing worth mentioning as well is stablecoins reflects a much bigger trend that we've been quite bullish on for some time now, which is tokenization. A lot more assets are going to end up trading on chain. So whether that reflects in the stock market, whether that's fixed income securities, whether that's now the US dollar, which is, a real world asset in the truest sense of the word, is now getting it's got its own on-chain rails. The market cap for it is in the trillions of dollars in my humble assessment. And so for a lot of people who are, doom and gloom on this market and this asset class, I would say that this is just a normal part of any sort of adoption of technology. There's, you had the gentleman before talking about the Gartner hype cycle. There's this, peak of disillusionment. Then there's a trough that hits when people start to realize, well, what can we actually use this for? I think that the real world application of tokenizing assets and ending up on chain is a multi-trillion-dollar asset class. And we're just going through a bit of a soft market cycle right now because the AI trade is front and center.
So, would you then direct your clients towards stablecoin or Bitcoin if they were only going to choose one?
I would say Bitcoin because that's an investment. Stable coins play a role in our clients' portfolios when we need to be a bit more defensive. We do see a lot of people coming into this space as well who use Stormrake as a USDT on and off ramp because of the fact that they've got it embedded within their business. We have clients who receive US dollars but also require AUD. So it's more closer to an FX broking desk at times than it is a pure Bitcoin broking desk. But if somebody's coming to me looking for an investment, we're going to be talking about Bitcoin because essentially USDT or stable coins, they're just a proxy for US dollar. And I'm not particularly fond on the US dollar or fiat currencies in general, but I'll keep that opinion aside for now.
And just one final question for you on gold. It's come back a bit, but JP Morgan is seeing its price at $6,000. Well, what do you think about gold at the moment? What would you be saying to investors about gold?
I'm quite bullish on the precious metals complex, as I am on Bitcoin because of the scarcity of it all. You know, when you're looking at the US debt clock, it's sitting on about $39.2 trillion in national debt. Currently, the interest expense to service that debt is about 1.2 trillion, projected to be about 5.4 trillion by the year 2032. So just 6 short years away. And that would exceed their tax receipts or their tax revenues. So from my perspective, this whole higher for longer, you know, this short-term permeation in the rate cycle where people are expecting it to increase in order to combat inflation, I think is just a bit of a misdirection. From my perspective, the US government, as well as our own Australian government here back home, cannot afford high rates. And there's not a single reserve bank or central bank on this planet that will operate with the intention to make their government insolvent. And so that's why I believe, from my perspective, lower interest rates are going to be a foregone conclusion, in my opinion, in order to maintain ballooning government debt loads and government deficit spending, which will then reflect in assets such as gold and Bitcoin ripping to the upside because there's just going to be such a strong bid on scarce assets. So whilst gold has gone through a bit of a normal correction after hitting lofty heights and doubling in a couple of years, I think you don't want to discount the shiny metal. It's going to come back with a vengeance.
So gold or crypto then as a hedge, if you had to pick as a hedge?
Oh, you're asking your Bitcoin broker here. I'm gonna have to go Bitcoin, of course, but don't discount it. I mean, as an investor, we got to look at it from a multidisciplinary perspective. There's we oftentimes we look at it like a versus type of scenario, but there's plenty of space for both assets.